Patience is important. As you age, you get a little more, you want to move at a faster pace and you want to have patience. And I think that's just important for a lot of people.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate, right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Tom Gayman here on the show. Tom, welcome.
Thank you, Neil. It's a pleasure to be here. I'm super excited to have an opportunity to visit with you.
I'm excited you're here. For the audience's sake, who are you? Where are you from? What do you do?
Again, thank you for the opportunity. Tom Gayman. I have my own boutique brokerage operation, Performance Realty, LLC. And I started it about 5.5 years ago. And it's just been so much fun. Born and raised here in Des Moines. So I know the Des Moines market and most of the suburbs really well, and grew up over on 39th and Kingman, Hubble School and Callanan School and Roosevelt, and then went to Grandview College. And I've always had an interest for commercial real estate. And so when I started in the property management side of the business, actually, and then I migrated over the years to the brokerage side, I would tell you I found the brokerage side to be very fun. And not that the property management isn't, but I just enjoyed the brokerage side. Married my high school sweetheart, Darlene. We started dating at Roosevelt, and we've been married will be 46 years.
Good for you.
And 3 grown children and 6 grandchildren. I'm very blessed. I love the business. I love talking to people, and I love solving problems for real estate investors or clients.
I'm curious, you spent a lot of time in the property management world. What did you take out of property management that you've applied to your brokerage role and then, ultimately to helping advise clients?
Take care of the customer.
Yeah.
That's number one. If there was anything else I learned about the property management is, your client is your lifeline to business. And if you take care of your client, they'll take care of you. And fundamentally, that transition out of property management with that relationship customer mindset, I think that is one of the reasons as a small one-person boutique brokerage company, that's what I strive for. Yeah. I take care of my customers, and I'll do whatever needs to be done to make sure that they're well taken care of. So,
is there an asset class that you spend more time in versus others?
Most of the time, it's generally the office market, the industrial market, flex, and I have done some land sales. Matter of fact, I have a land sale that should be closing today. Yeah. But my experience, I haven't done much retail. I follow retail a little bit, but my expertise has really been over the years in the office and industrial markets.
But Tom, isn't office dead? This is all I hear about. And of course, you and I chatted about the particular office we're sitting in here, my own, that we acquired, and have had tremendous positive experience in the last 2 years of ownership. So, what am I, or what are the rest of the world? What are we missing?
It's been an interesting couple of years for the office market, but I would tell you, the office market, it does have its challenges, and it has its challenges here in Des Moines, Iowa. The one thing that has been paramount, obviously, the back to work phenomenon of we'd like to have everybody back in the office and back in your seat and what have you. That's getting mixed reviews, quite frankly. But the small business and the medium-sized regional companies are very engaged in leasing space. If you look at some of the market data that has come out, just in the second quarter, I believe, there are 49 office transactions done in the metro area. Average square footage, though, was about 4,000 square feet. Thank goodness for small business, regional businesses. I think what's going on is a lot of these larger companies are saying they're just to terms with there's going to be a segment of the employee market that are going to work from home.
That's right.
And so if I'm running a business and we're in 20,000 square feet, I have calls, find me 8,000, find me 9,000 square feet. And if they're in 10, it's find me 5.
Right.
Now, the interesting dynamics about all that with the office market is now the baton is getting passed to, we want everybody back, and the big Amazon announcement.
Right.
And we want everybody back.
Mm-hmm.
And some people are saying, I'm not coming back.
Correct.
And then the office users and the landlords and the owners of office buildings have got to get very creative in what will bring those employees back to their office.
Yes.
And it's interesting because I've followed that now even more so on what's going to bring them back to the office. And it's the amenities. But it's got to be more than the gym and the conference center. And it was funny because it was just last night, I was reading an article, Wall Street Journal, of property on the West Coast. And I just thought it was interesting. They were talking about bringing employees back to the office. There was an 11-story building in Culver City, California, that a developer bought, got a great price on it. But the interesting thing was this particular building, the ownership group looked at what is going to bring these people back to this building. Mm-hmm. They equipped it with, completely renovated the lobby. They put in a movie theater. They put in golf simulators, fitness centers, tenant lounges, coffee shops, ping pong tables, arcades. Surprising. He has 100%, his building is 100% leased, 400,000 square feet. So I think the landlords just have to get more creative in what is going to bring these people back. Now, there's going to be people that are just not going to come back to work.
Right.
Unclear. But I think the office market will come back. It is coming back. You hear all the developers here locally talking about we're getting clients to renew their leases. They may be renewing their leases on smaller footprints, but they are renewing their leases. And there is not a lot of large transactions in the office market going on. Sure. The big one that everybody's totally aware of is with the American Equity folks moving downtown.
Right.
And so that's a big play. Maybe the other one for this year is Maverick down at the Nationwide building. But there's just not the volume of large transactions in the office market.
Do you think some of that is largely due to uncertainty in the economic environment? So not just the work from home component. It just has to do with the fact that in the last 2 years, interest rates doubled. Now we're starting to get some reprieve now. But for 2 years, tremendous uncertainty about where things are going, where rates are headed, and what that means to somebody's top and bottom line inside of a business.
There has been the term that I used and has come my way from other brokers, other investors is we are on pause. Mm-hmm. We are on pause right now because of interest rates. We are on pause because of the current political environment. They're not saying no. They are just waiting for a better time to bring it. And I think with the recent interest rate reduction, I've heard that certain componentry of construction ingredients to build are starting to come down. I'm optimistic that hopefully at 2025 will really send us in the right direction. But to answer your question, absolutely. My world has been on pause. There's been smaller office transactions, but the larger companies have just been on the sidelines.
Do you find yourself heavily focused on lease transactions versus sales transactions?
I spend probably more time on lease transactions. Sales, a lot of times the larger firms or I just don't get that opportunity. Have I bought and sold some buildings? Absolutely. Yeah. But most of those sale transactions in my business generally generated through a relationship that I have with the client. But
do you find the lease work more rewarding I asked because it seems like the sale work is a lot of it's numbers driven, and this is about a financial return.
Right.
On the lease side, you're working hand in hand with the business owner to help them move their business forward.
Right. Yeah. To be perfectly honest, yes, I think the lease, you get to know your client a lot more. You want to understand what their specific needs for their space. The leasing component just has a lot more various activities and componentry to it that just makes it more exciting. To your point, the sales are number crunching and where's the cap rate at and where's the, and not that obviously that's important stuff, don't get me wrong, but just to get excited, I like the leasing, both on the industrial side, the flex side, and the office side, and that's probably where I spend a fair amount of my business.
It seems like you get to understand your client more. You also probably get to understand their business and as a result, a variety of businesses that really fund and fuel this city because all these buildings are made up by people doing things here.
That's right. And I think there's we're going through a little bit of a renaissance right now with a lot of the conversions, Rouen Center, apartment conversions, condo conversions. You got the financial center doing that. Yeah, sure, it's taken a lot of square footage out of the vacancy rate. But there's just a lot of different things going on. And I think if you go out west, some of the more advanced, sophisticated landlords are trying to do and take a careful look at that amenity package and what's important and what have you. But it is an interesting time. And I think hopefully we will get back to one of the concerns that I have is, and I haven't seen much of it this year, with a larger influx of new business to Des Moines, to the state of Iowa. We need to have more. We've got a great place to live. We got a great place to raise a family. It's a great place. Iowa is a great state. So I'm optimistic with things at least turning in a favorable side that we'll get some new business.
What's going on in the industrial world?
The industrial world is interesting. Last check, over 3.5 million vacant warehouse space. All new, most of it new, high cube stuff. All the suburbs have plenty. You look at Grimes, you look at Altoona, you look at Ankeny, and there was this run 2 years ago, 3 years ago, where everything was on fire. It was 100,000 square foot users, and they were just crawling all over. And I think that has slowed dramatically. But during that time frame, the landlords just started building, and they just built and built.
Right.
In January, I took a tour purposely, and we drove the entire market, and we came up with about 3.8 million square feet of vacancy. Now, there have been 4 or 5 large transactions. I say large being 100,000 square feet or greater, but it's the 15 to 40,000 square foot users. Logistics have changed so much. Just-in-time delivery has changed so much. So there's a lot of vacant space that needs to be filled, and this stuff is brand new product with high rents, and there's a learning curve to that. Had a gentleman, I showed some warehouse space, and he was thinking we were talking $6 range, and this was almost $10 range.
Wow.
And so there's some variance there, and I think there are a number of prospects and clients out there that are going to pull the trigger and lease some of that space, but it isn't going to be the 100,000 square foot users. It's the 15 to 40,000 square foot.
Hey, Iowa investors, this is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
It's going to take some time to chop
through that, and I don't see anybody currently breaking ground to build a 200,000 square foot warehouse.
Yeah, it seems like between a combination of the new builds that have come online and where we're at from a construction standpoint.
Yeah.
Construction looks dramatically different today in every asset class versus
Absolutely.
a couple of years ago.
Absolutely. Yeah. I see that the flex market is a good market for these smaller companies that need the 5,000 or maybe 10,000 square feet. That seems to still be a relatively active market. I looked at the data that came out on one of the reports on lease transactions for industrial, 15,000, 8,000, 25,000. So the flex market is getting some of that action. It's just these large facilities it's going to be a while.
Yeah. That, it comes to mind on the flex side, is if you look historically, the footprints weren't that big to begin with, meaning the total building size.
Oh, absolutely.
You got a few. Signature's got one over in Altoona. Mm-hmm. You've got a few, certainly, that total over 100,000 square feet, but by and large, historical flex was never that big on the total footprint of that building.
That's right.
Yeah.
Absolutely.
And there's tremendous demand for it today.
There is a lot of demand for it. And I just talked to Signature this week. And I assured them, too, that, now grant you, the ceiling height is a little small. It's not as tall, 26 in the clear. It's not the high cube.
It's not an industrial product.
Not an industrial product. It's a flex product.
Yeah, right.
But it is leasing up.
Yeah.
And so I agree with you 100%. And I think that was probably one of the largest flex buildings built in recent years. Right. So I think that it probably goes back to what we just talked about with the office leasing, just these smaller transactions in terms of square footage. The smaller transactions as it relates to these businesses that need the 15 to 40,000 square feet.
Yeah.
Now, I think landlords, at the time, I remember back when the market was super hot with large potential clients out there, there were some developers that were basically saying, we don't want to lease to we're going to hold our property for the next 100,000 square foot user.
Yeah.
Which was really surprising.
Yeah.
And their comeback was, there's just a tremendous amount of volume right now, and we don't want to pay the price to put in a separation mall.
Yeah.
And we don't want to pay all those numbers so we just don't want to do it. We're going to wait. Now you can pretty much call them all and say, I've got a 25 to 40,000 square foot user, and then they're just more than happy to show you the space.
Correct.
So it just over the last couple of years, there's been a pretty significant shift. So
as you look into next year, 2025, what's your crystal ball tell you? Where are we going with some of this? And what are you most excited about?
I am optimistic about 2025. I just think that we've been in a long waiting period to where's the soft landing coming? When is it coming? Inflation, all the economic turmoil that's going on right now. I think the Fed did a good job I was excited to hear a 0.5 percentage point.
Right.
I think everybody, at least I was thinking, they're going to be very conservative and do 1/4 point. Mm-hmm. I've also heard I was excited on the 0.5 point, and that may get another reduction before the end of the year. So now we're going to go into 25 with, I think, some optimism. I think people that I'm talking to are saying, we're preparing our budgets right now. The budgets are being completed. They're going to owners. They're going to the board for approval. And we have expansion plans in 2025. So what does that mean? It may be an expansion in the office market. It may mean an expansion in the industrial market. Retail is still, but we got 3.8 vacancy in retail around here. It's just on fire.
Yeah.
You build it and they lease it up.
Retail has been great.
It's been great. There's positive things that have been going on in the retail market. I think a lot of it is going to depend on how many people, from a demand standpoint, employees, how many come back to work, and where's the growth in the employee base. I'm optimistic. I don't think we'll see a lot of robust activity and deals getting closed until second quarter. First quarter, I think everybody's going to be out kicking the tires. In the years that I've been doing commercial real estate, my timeline, and I've always shared it with some of the other people that I've mentored over the years, is fourth quarter, budgets are being prepared. Current budget dollars are shot.
Yeah.
They're waiting for the ownership group to approve the budget. That all gets done by the end of the year. January, everybody's off and running, showings pick up, activity picks up, people get very optimistic. Transactions start going into the proposal form and the potential lease form second quarter, maybe get executed third quarter, and then the cycle starts again in October, November. Yeah. And it just seems, at least for my business, that's how it works. Yeah. Now, I'm just a small brokerage company. But to answer your question, optimism, I'm optimistic. I would like to see more growth of new business coming to the city.
Sure.
And we got the partnership working on that, and they're going to have the big regional event get together next week, October 3rd, to bring all the communities together. And I do think we probably need more regional and community participation to try to get deals done. And that, learned that. I spent 12 years on the Urbandale City Council, and where we are in the world today, it's not about just Urbandale, Iowa.
No.
It's about the region. It's about the other communities. It's about West Des Moines. And how are we going to work together to grow? And I think that's out there. I think we need to turn up the heat a little bit more on that. But I'm optimistic.
If you can get the bodies here, ultimately every city's going to win.
That's right.
Everybody's going to get a slice of the pie.
Absolutely. You're spot on. If everybody, and I think it's going to be interesting. You're reading about Amazon. He just came out and said, everybody's coming back. 5 days, wait. We're going to get back in action. How is that going to be perceived and digested with the other CEOs around the country?
Right.
I've been reading about that. It's all under the microscope right now. Right. Are we going to do it, or what are we going to do? You know, I've seen the benefits of some hybrid work, where in the office maybe 3 days a week, and you can still do. And there are a lot of companies that are thriving in that model. So that component's going to be interesting just to see how that all plays out in the longer term.
Yeah.
But I still think, to your point, very much agree with your comment that if everybody gets together, we can all have a slice of the growth.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Yeah. For you, why Iowa? What keeps you here?
It's funny you should say that, because I love Iowa primarily because of its people. We've got a great employment base. We've got I enjoy working with the people of Iowa. They're honest. They've got integrity. And then it's just a great place to raise a family. All my kids, they all went through the public school system in Urbandale. They've got a great education. They all went to great schools for their college. We've just had a really positive experience. Early in my career, when I was doing property management, I had an opportunity to move to San Francisco.
Okay.
And my wife and I, we hadn't had any children yet, and we were talking about starting a family and what have you. And we spent some time out there, and we told the developer that I was working for that we were going to pass. We fell in love with it. Don't get me wrong. It was a neat opportunity. But it was funny because his comment back to us is, you two are just good old Iowa folks. So I am born and raised here. Have I had any desire to move elsewhere? Only in my latter years here. I'm a mountain man. I love to go to the mountains, and we just came back from Colorado, and we spend a lot of time in Colorado. And if all of our kids and grandkids were not here, or all of them here in Des Moines, I would consider that too. But that's it. Otherwise, I just think Iowa is a safe place. We've got great people. We've got our fair share of very unique opportunities here. And we got low unemployment, the quality of life, cost, all those things come into play. And I think we're just very blessed.
So I feel like here.
Yeah, absolutely.
Tom, you ready for the final 3 questions?
Absolutely. Fire.
One piece of advice you'd give to your 20-year-old self.
To myself?
Yeah. Patience.
Patience is important. And I think as you age, you get a little more, you want to move at a little faster pace and you want to have patience. And I think that's just important for a lot of people. My MO for the business that I'm in is this real estate business is a relationship business.
Right.
It's not a transactional business. If you want to do commercial real estate and all you're thinking about is the transaction and not your client, I don't have any energy for that. So, patience. What does the client need? What is the problem? How can I help? And extending that hand and saying, I'm here for you. That's what I try to do in every transaction. Patience.
2 books that changed your life.
The one that comes to mind, and I'm short on that, it was Make Your Bed. I just found that to be interesting in that your day can start with something as innocent as
That's right.
Make Your Bed. And I read that book. It was a quick read. I still have it, and every once in a while I'll pick it up, just shoot through it one more time. I'm trying to think of some others, but I read, but I probably read more as it relates to current market activity, Wall Street Journal, Barron's, all of those, just to keep my hands on the market. I find a good read every once in a while. Make Your Bed was fun. And so, yeah.
If you were cast away on an island for a year, you can only get 3 pieces of data about your business each and every month. What 3 things must you know every month to know how your business is running?
Great question. How are my people doing? Would be, in my opinion, the most important. Are we still making money? Number 2. And what's the future look like for my business?
Yeah.
So it's my people. A lot of people talk about all their real estate assets. And that's bricks and mortar. That's what you and I know.
Yeah.
You know, the biggest asset that you have is your people. Your people are your employees or your assets. Your employees, and are we still profitable? And those are the 3 most important things that
I think you get it on the head there. People, your employees. In my world, it's your vendors too. Who's really close, right?
Absolutely. Vendors. Yep.
I remember reading a book, it's probably been 20 years now. So the fastest way to become a millionaire is hire that absolute right person.
Mm-hmm.
It's the fastest way.
Mm-hmm.
In your business.
Yeah, it is. And then provide that person the tools to be successful.
That's right.
And stay out of their way.
Yeah. What about that?
You know what I mean? I mean, the micromanagement days are over.
Yep.
And I really mean that. The young people of today, the Gen Xers, the millennials, they're not going to do it.
Right.
You turn them loose. I've heard specifics on different companies that they're all working remotely.
Yeah.
And the company was a little hesitant on working on remotely. But they've got great people. They take care of their people. And they're highly successful. So it goes back to what we just talked about, take care of the people. And I understand all this about you've got to have some culture and some vibration, bringing everybody back to the office and what have you. I can respect that, but taking care of your people translates to loyal people, loyal employees, and people that will, when you're on the island, they'll deliver.
Tom, I've asked lots of questions. What's one question I did not ask that I should have asked?
I think, Neil, this has been a great conversation. I think I appreciate the opportunity. My perspective is I'm a small brokerage operator. Like I mentioned, I love to work with various clients. Most of my business is just relationship-driven business. I'm not the large. I will put a plug in for the smaller brokerage houses, though. Yeah, because they contribute.
There's no doubt.
You may not hear about them in all the different publications, but I made some notes on some of those folks and because I know I'll miss somebody's name, but there are some great smaller brokerage houses that deliver results for the benefit of Central Iowa. And so I think there's a place for us. There's a place for the larger corporate entities. We all hopefully play well together.
Yeah.
And it's all about getting the deal over the finish line.
Tom, for people who want to find you, they want to follow you, they want to connect with you, where can they go or what should they do?
My best componentry is LinkedIn. I get a lot of feedback and a lot of just great conversations with people at LinkedIn. I don't like to do a lot of, I'm a face-to-face broker.
Oh, yeah.
I will buy you coffee and let's get together and talk. Because that's really how I've always done business. That's not to say that all of the technology that's out there isn't great. I use some of it. Other components of it I'm highly dangerous with, so I don't use it. But an opportunity like this that you shared, that I have an opportunity to share a little bit of my thoughts on where the market is and what's going on, is greatly appreciated. And I really want to thank you and wish you and your group nothing but success.
Tom, you're a gentleman and a scholar, and I appreciate your time being here. For everybody who are listening, the link to Tom's LinkedIn profile is below in the show notes. That's where you can find it. Tom, I appreciate being here.
Thank you so much.
My pleasure.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to legacyimpactinvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.